Good morning. This is Larry Edelson for my Uncommon Wisdom weekly video market update for Thursday, June 9th. I want to go right to the charts because we're starting to see some good action in many of these markets, especially the markets that I've been following for you, which are the major markets, the key select markets that really impact all of your portfolios and really are essential to today's economy. And having said that, let's go right to gold, which is still one of the feature markets right now and asset classes all over the world. This is the chart that I've been following for you in gold. Last week in my weekly video update, I noted how this action here is very corrective and not impulsive, not indicative of a new rally to the upside, and rather probably a rolling over type action as we get into the short-term cycles, which are pointing lower for gold, and we start to get very close to the seasonal weakness that's coming up in gold, which is typically the June through August period. And right now we're starting to see gold, in fact, roll over. It is still holding support, as you can tell, this uptrend line here. I do expect that to be tested. I do expect gold to fall down to 1500 and then retest the 1477 level, which is in this area here. At that point, we'll be able to determine gold's next big move. It is entirely possible gold can pull back to 1425, perhaps even a little bit lower here. But I repeat, as I have practically every week now, the long-term bull market in gold remains very, very much intact, and you should not be concerned about these short-term moves. The reason I give you updates on these short-term moves is so that you can have a better feeling, a better expectation of what's going to happen, so that you're not sidetracked by any of the volatility here or knocked out of your long-term core positions, which would be a disaster. I maintain my view that dips in gold and pullbacks in gold should be used to accumulate positions for the longer haul, where we will see gold move much, much higher, gold stocks move much higher, and all gold and precious metals related investments move much higher over the next few years as the sovereign debt crisis continues to work its way through Europe and the United States. Now, let's go next to silver. Silver, I maintain my cautious warnings there. Silver is not looking good. I expect a test of the $28 level at a minimum, and probably the $23 level, at which point, upon a successful test of either 28 or 23, I will put out a very aggressive buy signal, but not until then. And as you can see from this chart here, I mean, silver is still acting very, very weak and likely to take out this low here, pulling it back again to at least $28. At that point, silver has a chance to hold important support, and I'll determine then, based on the signals that I'm getting, whether or not 28 is going to hold, and we'll see a test of 23 if that's possible. Either way, I will be looking to get aggressively long silver bullion and silver related investments at either $28 on the at a price level for silver, or $23 for silver. Let's move on now to the dollar. The dollar index is basically the same pattern that we saw last week. It's trying to find support in here. I think the dollar, I know it sounds like a rather lame short-term forecast. The dollar can either move back down to a new record low or stage a rally in here up to 78. Cyclically, the dollar should be finding a footing here and staging a rally, and that's probably why we're starting to see stocks and the U.S. economy start to slow and roll over again. Anticipation that should lead to a higher dollar, and it should anticipate a higher dollar. But long term, the dollar remains very much in a bear market, and don't kid yourself at all about that. The dollar will lose its status as a reserve currency going forward. You do not want to be long, naked long the dollar and dollar related investments without a hedge in some of the best hedges against the dollar, which of course are gold and other natural resource related investments and commodities. Now, I want to go right to stocks. That's where a lot of the action has been over the last week. We have seen the Dow pull back to 12,000. That's not surprising to me. I indicated to you in my past couple of videos I was expecting the Dow to start rolling over, maybe get a test at 12.8. We couldn't get up there, and we did start to roll over. We're now down at 12,000. I believe the Dow can move down to the 11.4 level. We'll find some support at 11,800. If that gives way, then we'll see 11.4. Now, importantly, this is a correction of the big rally out of the March 2009 crash lows. I don't believe we're heading anywhere near back to those levels. 11.4 might be the only downside we get in the Dow before it starts to reflate higher on the back of QE3 and a crashing dollar down the road. But right now, we're starting to see signs of slowing in the economy and concerns that the Fed will exit its quantitative easing and not initiate a QE3, which is probably what's going to happen in the short term. The Fed is probably going to try to exit. We'll see the economy roll over, we'll see stocks roll over, and then at some point in the future, of course, the Fed will come in and say, Mr. Bernanke will come in and say, hey, we can't have this. You know, I'm pumping up the money supply again. I'm printing money like crazy again. We're going to go back in and reflate assets. So that's basically how I expect it to unfold, and it's what the signals that the Dow Industrials and many other markets are telling me right now. Expect some weakness, and then expect perhaps later in the summer the Fed to come back in with more money printing and another round of asset reflation. So stay tuned, and until next week, have a good weekend. Stay in touch with all of my publications, whatever ones you subscribe to or read. This is Larry. Have a good weekend.